Hey everyone! Today we'll be talking about the tax benefits of the 401k. It's a lot easier if we take a look at specific examples when we're talking about the tax benefits of the 401k. So, for simplistic purposes, let's say your gross pay is $60,000. Your tax rate is 25%. If you've made no contributions to your 401k, then your take-home pay would look a little something like this. $60,000 minus $15,000. $15,000 is 25% of $60,000. Your take-home pay after completing this calculation is $45,000. Now let's take a look at an example of someone who is a contributor to their 401k. Let's say you have the means to contribute $10,000 to your 401k. If you've contributed $10,000 to your 401k, let's do this take-home pay calculation again. So, you are still making $60,000. But you've contributed $10,000 to your 401k. Remember, any amount that you contribute to your 401k will reduce your taxable income. So now, instead of being taxed on $60,000, you're being taxed on $50,000. Now, your tax rate is still 25%, so 25% of $50,000 is $12,500. Your new take-home pay is $37,500. Now, I know that number seems like a lot less than the above number, but note that you still have $10,000 of your own money that's in your 401k investment. Now, because we're talking about the tax benefits of the 401k, let's note that your tax benefit is really going to increase by $2,500. This is how. $37,500 plus $10,000 that you've contributed to your 401k is $47,500. This is the total amount of wealth that you've created by contributing $10,000 to your 401k. If we take this number minus the original number where you did not contribute to your 401k, you have an increase in $2,500 simply by contributing to your 401k. Your tax rate did not change. However, because the taxable income changed, we've been able to increase our wealth by $2,500. Now, another added bonus is what we like to call an employer match. A lot of employers have an employer match program. These differ by employers, so you can check with your employer to check out what your employer match will be. For another simplistic example, we will say that this employer is going to match up to 5% of this person's salary. Now you can think of a match as the same way you would think if your employer was going to match a donation to a charity. Basically, this means your employer will match dollar for dollar up to 5% of your salary in this case. 5% of your gross salary, 5% of $60,000 is $3,000 in, you guessed it, free money. All right, so now let's do another calculation. You've just received $3,000 in free money. Now remember, you do need to contribute $3,000 as well to your 401k to be able to receive this $3,000 match. It's a match, so whatever you contribute, your employer will also contribute. You can always contribute less than this, but we suggest contributing as much as you physically can up to this amount. All right, so let's take the $37,500 take-home pay from before. Let's add your $10,000 contribution to your 401k, and then let's add the $3,000 that your employer gave you from the match. When we add $37,500 plus $10,000 plus $3,000, we get $50,500. Wow. Our total wealth is now $50,500. We have essentially given ourselves a 12% raise just by contributing to the 401k. I hope that this made sense to you all, and I hope that you enjoyed this video. If you did, please subscribe and give me a thumbs up.